I have a confession to make. As much as I truly want to be faithful to Facebook stock, I sometimes see Apple stock on the side. I'm sorry. By the way, Apple just reported earnings. Did you know that? I bet you did. Up 1.87% after hours. That's right. What did they do? Why are they up? Why are they up? It's Apple. Come on now. No one can make Apple go up. Just kidding. Apple stock is rocking it year to date. Already up 54% year to date. I'm glad I have some Apple shares and I bought some more before the year. Let's go. Apple EPS of $3.03. Beats by 19 cents. Love it. And revenue, extreme beat. 1.18 billion beat, which means they were up 1.8% year over year, which again is not a huge, year over year growth, but as such a well-established company like Apple making $64 billion, 2%, it's a lot of cash. It's a lot of cheddar. I don't know about you, but they were pretty well estimated it was going to be flat in terms of their what they're making. So I'm surprised it's actually not up higher after hours. Again, I mean, everyone has their own reactions to everything. Again, it's been on such a tear, so it doesn't shock me that it's not up higher than it is after hours in trading. We'll see how it goes tomorrow, obviously. But overall, those are lovely numbers. And then on top of that, Apple went ahead. They love declaring their dividend whenever they report their earnings, in line with previous, which makes sense. It's not time for them to raise. They raised at the start of the year, and they certainly will raise. Next quarter, I'm going to say they're going to raise it to 77 or 79 cents. I can guarantee it. Guarantee you. Heard it here first, folks. Apple reports Q4 beats. Q4 beats with sales up 2% year over year. The quarter shows strength in iPhone sales, wearables, and services, plus an inline holiday quarterly outlook. Love it. Revenue breakdown by iPhone. Again, this is one thing to note. Now that they don't necessarily report iPhone numbers in terms of the quantities sold, we only have a revenue line to go off of. But again, higher revenue on the iPhone than consensus was. And this is because of higher performance of the iPhone 11 than a lot of people thought would be possible. I think a lot of that is, they're not going to break down the numbers here, but I think it is just the base iPhone 11 as opposed to the Plus or the Pro. The Pro or Pro Plus. Pro Plus. That's too much to say. That budget model of phone, again, it's cheaper. It's cheaper than last year's iteration of the cheaper phone, the 10R. So I think a lot of people flocked to this 11. They may have skipped over the 10s and they went straight to this iPhone 11 because it was cheaper than that 10R and really kind of is a better phone too. I mean, people who waited probably got a good deal on this. Again, they're not 5G phones. They'll be releasing 5G phones next year. But overall, if you look here at what I highlighted, it's a little face that's like winking, but he's also sad at the same time. He's got a frowny face. iPad, right in line with consensus. Mac, a little bit below consensus. Wearables and home, beat by a hefty margin in terms of consensus. Beat by 0.5 billo, 500 millo then. That's what I'm going to say from now on. Not saying billion, I'm saying billo. Services, that's right, another beat in services. Services is the future of this company. And it's good to see continual growth, and they're rocking it. Greater China revenue was 11.2 billion compared to 11.4 billion in last quarter. Chinese economy is a piece of crap, so again, you shouldn't expect much. You shouldn't expect much growth, I would say. Their economy is all sorts of jacked up. So they're going to be decreasing in terms of revenue, or staying flat at least for the next couple of years. China's headed for a recession, there's no doubt about it. We'll see how it goes, though. Who knows? Q1 revenue or operating expenses. We got to look at operating expenses. Total 8.7 billion, up from the 8 billion last year. So 700 more million in terms of expenses, or 700 more millo. Their Q1 outlook, so first quarter next year, 85.5 billo to 89.5 billo versus a consensus of 86. So this is going to be the holiday quarter, so it's a huge one for them. So that's good, a little bit above consensus in my perspective in terms of that range. Consensus margin higher than consensus. Operating expenses also higher than consensus. So it'll be interesting to see what all they're spending on, what that increase is. So next I will be post updated to correct first bullet. I don't know if you knew, but they had it wrong before, so that's why I waited. That's right. So if we're looking at their press release, so Apple here, services reaches an all-time high. Again, this is the future of the company, their services revenue. A lot of that's going to be through their new push of Apple TV Plus again. Just think of all the services revenue they're going to bring in from that as they make that more of a steady staple in terms of the business. As they move more from their hardware side of it, they move towards services. It's just it's a company that's transitioning from, I don't want to say stagnant, but they were a somewhat stagnant business model. I mean, they were just, a tech company that was known for selling phones. They've really turned to growth. Revitalized wearable category. They're pushing more into services now. I mean, they're turning into a growth stock from a stock that was pretty well just a value stock that you didn't really expect to have the world's best return on, but they're putting returns as if they're a growth stock. I mean, 60% up in a year. Those are ridiculous numbers. Obviously, we'll have to see where it ends, but I mean, I'm very happy with Apple. I want to buy some more though, so I mean, I wish it wasn't up this high, but again, it is what it is. Apple today announced for financial results for fiscal 2019 fourth quarter, ended on the 28th. Company posted quarterly revenue of 64 billion, increased 2%. EPS up 4%. International sales accounted for 60% of the quarter's revenue. It's a big portion. Certainly a big portion. 60% is everywhere outside of the U.S. We concluded groundbreaking fiscal 2019 with our highest quarter four revenue, fueled by accelerating growth from services, wearables, and iPad. With customers and reviewers raving about the new generation of iPhone. Again, it's all, I don't necessarily say it's the whole new generation. I do believe it's mainly the 11 that's pushing that. They're not going to give us the numbers to back that, but from what I understand, just personal experience, it's just the base 11s that are really performing that super well. Debut of the new Apple AirPods Pro. Again, the AirPods Pro, not a super exciting product in my opinion. Obviously, noise canceling is neat, but they're really the same model, and they only come in white again. I mean, I was hoping they could at least have a different color. I mean, come on now. Hotly anticipated arrival of Apple TV Plus just 2 days away. You know it. Best lineup of products and services ever. We're optimistic about what the holiday has in store. Again, I am too. I think this is pretty exciting. People are going to be getting some new phones. New phones for Christmas. I know I would. Our strong business performance drove record Q4 EPS and record operating cash flow of $19.9 billion. Sorry, I love talking about cash. We also returned $21 billion to shareholders, $18 billion in share repurchases, and $3.5 billion in dividends and equivalents. Look at that. $18 billion in share repurchases. Again, it does contribute to the share price increasing. Less shares outstanding means higher value per share, which is exciting. So you love to see buybacks. We continue our path to reaching a net cash neutral position over time. That's okay. Apple is providing the following guidance, which we love to see guidance. We talked about guidance there already. This is good guidance. Tax rate approximately 16.5. That's exciting to know. And they announced their dividend here. My gosh. Let's look at these consolidated financial statements as my throat is so clogged I don't know what to do. On their products, this is a full... I mostly look at the full year here because we want to compare 2019 and 2018. So there is a decrease in terms of revenue in terms of products, but if you look at that service line, the service line doesn't quite make up that entire amount, but total net sales not quite the same year over year. Again, as I said, it's not necessarily a company that's mega growth, but I think they're transitioning into where that can be more of a factor again. Cost of sales decreased slightly, so the gross margin actually did decrease just a little bit, actually, a little bit more in terms of expenses there. Operating expenses, you see a growth of around $4 billion in terms of operating expenses. Nothing insane. We definitely like the operating income, and the net income number made $55 billion in terms of cash. Yeah, that's a lot of money. In case you were curious, it's a lot of money. Just gonna tell you that right now. Which again, it was actually less than they made last year in terms of net income. So, and you can see that obviously with revenue a little bit lesser than that. It's pretty exciting though. You know, you want to be making cash, $55 billion. I definitely want to be making cash, $55 billion. Give me some of that. I'll take a portion of it. Net sales by reportable segment. We care about again this line over here. Far right here, we want to look at the 12-month. In my opinion, I look year over year a lot. We see obviously growth in Asia Pacific, a little bit of decline in Greater China, which is expected. Japan stagnant, a little bit of decrease in Europe, and growth in the Americas. Net sale by category, iPhone revenue down. That's right, they're down, which is not a shocker. Again, they're transitioning away from iPhone being the main portion of their business at some point where they are going to have services be the main business. Again, you see a growth year over year of around, my apologies, of around $5.5 billion. Mac grew a little bit. iPad actually did grow, which is pretty good for them. iPad growing is nice. And wearables grew significantly too, which is very cool to see. I think it's personally very good to see. Again, it's a lot just driven by Apple Watch, as well as AirPods. Those are kind of their focus there. But yeah, you see total net sales decreased just slightly. Current cash and cash equivalents. You know I love seeing current cash. $48 billion in terms of cash. I love it. And debt. You know I love looking at debt. That is something I don't like. Look at the debt. They have debt to them. You know what? They certainly have debt, but they have the means to pay it off. Is the real main thing I think about this. Obviously, you know I'm a guy who focuses a lot on cash and debt, but a company that posted in a year $55 billion in terms of cash flow, so $55 billion in net income. Again, I think I'm okay with a little bit of debt where you can pay that off within a year, and they can really if they wanted to. I think they're really working more on development of new products, which is where that debt comes from. But they have no issue paying that off at all. So I'm not concerned in terms of debt when it comes to Apple. So again, those are really the reports I want to look at in terms of this Apple's earnings. Very good earnings for Apple. We'll look to see them have a very good holiday quarter. Again, a lot is dependent on how they do in Q1 here, start of the year. This is the holiday quarter for them. The Christmas quarter, as I'm going to say, I'm not afraid to say the word. We'll see how they perform because this will have a big impact on stock price if they miss expectations pretty wildly. you can see the stock jump down pretty high. We're just in a very volatile time in the market, so anything could bring anything, up significantly or down significantly. You just never know. But that's all I got for you.